Happy noon, everybody. This is Strategy Now here at MarketStream.live. I'm Joe Cusick from the Cusick Group, securities offered by MoneyBlock. It's been an interesting midday. We still see that stocks are currently trading on a lower note into the midday action. You see basically a favoritism to more defensive action. And the posturing right now is based on a handful of reasons. The most notable, the one that we keep hammering on, which is the election. We continue to see polls that are coming out mixed, and that's going to continue for the rest of the week. Let's really focus on what we do know and what we're looking towards as far as what's going to come out in the next couple of days before the Tuesday, November 8th election. First of all, let's take a look at the downturn in the crude markets. The crude markets have come under pressure, and they continue to today. As a matter of fact, I'm taking a look. Well, let me just update you on the major indices beforehand, before I get into the crude markets and the bond markets. The NASDAQ right now, as I see it, is down about 0.5%. I see the S&P down about 0.3%. Dow Jones is down about 0.1%. Now, with these major averages extending the downside, challenging, some critical levels right now as far as support's concerned. I was just looking at something. We want to see what are those catalysts. The biggest one this morning that we saw, and we talked about this on the What's Hot on the Open at 9:30 Eastern Time, was the oil markets. The oil markets continue to be very bearish. As a matter of fact, the API data, the American Petroleum Institute, came out, said there was a build of about 5.3 million barrels. Then all of a sudden we had the EIA report that came out at 10:30 Eastern Time after we had spoken on the opening bell. And as a matter of fact, they came in with a very bearish inventory number, 14.42 million barrels. The consensus coming in was a build of about 1.1 million. Folks, that is huge. There is a glut of oil at Cushing. There were a lot of larger net imports that we saw, but that is a big build. That put pressure. We actually see that crude right now is trading at around 45.24 on the Dees contract. That's down about $1.43, down about 3% today. And as a matter of fact, I'm looking at the crude contract for December, which is expiring in 14 days. They're still pricing in the potential for crude to be basically in a $3 range, either as low as 42 or as high as 48 over the next 14 days. So we got some definite volatility in the crude markets, and definitely we'll be keeping an eye on that. Couple other things that I wanted to point out was the gas futures. We had talked about that yesterday when we had a big spike yesterday morning after there was the Continental Pipeline had an explosion. That's the pipeline that basically services the East Coast. It actually ends up in the New York City, at the Bay there, in that area that's where they deliver. That pipeline delivers the product. And we saw that actually there was quite a large draw. As a matter of fact, I'm taking a look right now at the RBOB prices, but I see that the draw right now was about, I think it was around 2.2 million barrels of gasoline stockpile were drawn down. That's quite a bit more than what was the consensus estimate, which was about 1.89 million. So we see that there's a draw there. We're going to keep an eye on that, especially with that pipeline on the East Coast. Obviously, gas prices are going to be impacted specifically in that region. But you did see that the gas futures, the RBOB futures, actually went as high as 160 and some change yesterday, pulled back dramatically, got into the 147 range, that are just basically waffling around there. A little bit to the upside today based on that inventory draw. We're still seeing the election jitters. We see mixed polls. The ABC poll comes in, basically has Donald Trump and Hillary Clinton neck and neck. You have the LA Times coming in, having Clinton actually Trump up a little bit. Bottom line is, I'm not looking at those polls. I'm going to look at the fear index. The volatility index right now, the VIX, is trading right around 1914, up about another 58 cents today. That's 3 points basically over the last week or 5-6 trading days. That's a pretty impressive move. As a matter of fact, as I look at the VIX futures right now, they're still pricing in the potential for VIX to get into that 21-22 range. So there is some upside there on the volatility index. That's going to be my barometer, especially as we go into the FOMC meeting. I'm not only going to be watching the VIX, which is going to give me an indication of whether or not there's more fear in this market, but I'm also going to be watching the bond prices. Right now, the safe haven assets have been in play, specifically the 10-year and the 30-year bonds. But the yield sectors in general have not. I mentioned it this morning that we actually saw some utilities in Asia and in Europe. They were actually pulling back. We see the same type of yield companies or yield play sectors that are under pressure. Specifically, utilities here in the States are down about 1.3%. I see telecom services. I'm looking at some names right now. The group's down about 0.9%, and we're seeing real estate down about 0.7%. They've been unable to gain any type of traction now that we see that the bond yields are coming down and the prices in bonds are going up. That's telling me that those that are looking for some yield or safe haven yields are not going to these sectors or these companies that typically have higher yields than what's currently being paid in the treasuries. They're looking for more of a pure risk-free type of return. They're looking for safe havens. And so they're going into the 10-year and the 30-year right now. As a matter of fact, taking a look at the 10-year, they're pricing in the potential to move either up or down about 370 on the 30-year, and on the 10-year, about $1.48 or 148. That's pretty significant. Those are some big moves. There's a lot of volatility in those futures markets right now. Want to keep an eye on that as we get closer to the Fed announcement that's going to be out in about a half hour. So as soon as we get off, in about a half hour, you're going to start to see the tape line up with what's going on with the Fed. They're going to come out with their statement. I want to keep an eye on that very closely. As a matter of fact, I'm watching some of the other offensive sectors that are going to give me a barometer in advance of the Fed. And also, don't forget, we also have a very important employment number on Friday. So after the Fed comes out, we're going to have a lot of potential volatility. There's going to be a lot of action. I don't know if it's going to be up or down, but right now I know that it's going to be volatile, and that's going to continue through the end of the week with unemployment. We'll talk more about that this afternoon at the closing bell. But taking a look at the financial sector, it's down about 0.7% as a group. It's basically been showing relative weakness as downturns in yields continue to weigh not only on oil, but also on the financials. Banking names are under pressure. They have been basically the rock, so to speak. I had mentioned it in the last couple of sessions that the financials are up about 1.7%. Going into the fourth quarter. They're being challenged. If in fact the Fed statement comes out and you know what, they're a little bit more split, 5-4 basically, of the 9 governors, 5 for raising rates, 4 potentially against or mixed. That's a mixed statement going into December, even though there right now is around a 72% probability that they're going to raise rates at least a quarter point into December. That could change that probability pretty significantly. There's only about a 7% probability of them raising it this afternoon. If it does, get ready for some more volatility, not only in the fixed income markets, but the general markets. I would be extremely surprised, but hey, this market has been surprising a lot about everyone. One thing that you want to keep an eye on are the regional banks and just the banking sector in general. Keep an eye on KBE, which is the ETF that's going to track the banking sector. It's down about 51 cents or about 1.5%. We're going to watch this to see if there's more cautious trade that comes in, not only in front of this FOMC, but also the employment number. I don't think that they're going to raise rates, but again, it could happen. Take a look at that action as we wind closer to that moment. I'm just taking a look at some other names that are coming across. Biotech, most notably, has come through, as well as the healthcare sector. Healthcare is down about 0.1%. Biotech's under pressure. Allergan, as we reported last night in front of earnings, and then after in this morning, down about $9.20. We basically gave you the range. It had a range of right around $9 that the options were pricing in, of either plus or minus. The stock's down $9.20, or about 4.4%. Gilead Sciences is down as well. Both names missed on bottom line estimates and for the quarter. In general, taking a look at the biotech area and sector, IBB, which is the biotech ETF, down about $3.20 on this weakness in these names. Continue to see that under pressure. Right now, down 1.2%. There are some positive notes, though. Anthem, ticker symbol ANTM, is up about $5.51 at 122, gained about 4.7 cents or 4.7%. Basically reaffirmed their guidance. And, maybe it's masking a little bit of their below consensus earnings. But again, stock's up, and we're going to make sure to keep an eye on that. Take a look at some oil names since we just talked about general and crude. I want to take a look at Occidental Petroleum, OXY, down about 74 cents. Anadarko, APC, trading at 59.81, down about 14 cents. They're respectively down 1.1% and about 0.2%. Basically, right now, these are trading at neutral to outperform based on some new analyst recommendations that came out from Credit Suisse. The broader space continues to be challenged, and I think it's going to be very interesting to see how this plays out. Watch the yields on the 10-year. They've dropped about 3 basis points to about 180, 1.8%. Watch this very closely as the Fed comes out. This is going to be a good barometer to just see how much volatility is going to come in. We did see some positive notes on the overall employment report, which basically came in and said, you know what, September looked good. Okay, that's great. But then they reversed and said, well, take a look at the ADP employment change. It's actually at 147,000. That's adjusted down, or basically downward from the consensus estimates of 165,000 folks. If we start to see that job growth is slowing down, again, another potential red flag that's going to impact the Fed. We're going to find out this afternoon. The MBA mortgage application index, applications fell about 1.2%, ending at the end of October. This followed a 4.1% decline from last week. That is not a positive trend, but this is a slow time of the year, so we'll see if that is also going to be weighing in on the Fed's decision about what they're going to do, not only in this November meeting, but we're also going to look at the December meeting. Other than that, expect more volatility. It's coming. It's going to be here for a while. We're going to watch that. The two things that I could tell you to do: trade smaller. If you are looking to add some potential protection right now, be very careful. Take an opportunity to look at your winners, maybe slice back some of those winners or some profits. Wait until we start to get a clearer picture of what this landscape looks like. As a matter of fact, join us 3:30 Eastern time. We're going to be talking about those components and how we can look at the market through Tech Talk. And we'll also do the closing bell at 4:30 Eastern time. So join us then. All right, have a great rest of the trading day, and we'll talk to you soon.